All right, so folks who have been in this market for some time or who've learned about this market, right, remember the famous or maybe infamous irrational exuberance speech. Alan Greenspan, he was then, of course, in charge of the Federal Reserve back in December of 1996. It was the shot heard round the world, a warning about the market and how crazy it was, right? And well, for a split second, the market actually listened. It turned lower, I think, and for a split second, right? They were sobering comments. And before turning around, people thought for a moment, yeah, he's kind of right. But then the rally resumed and it went on for almost another 4 years. And you know what? It got a heck of a lot more irrational. The market eventually crashed, you know that. And the narrative has been that nobody made money, but some folks did bank the money, some money back then. Listen, it was mind-boggling, the amount of money that was made and the trades that were made. Now, these days, I believe the market is at times irrationally pessimistic. Think about this. We wouldn't be down a lot in momentum names if we were irrationally exuberant right now, like the narrative is. Every time the market goes up, they say retail is too excited or too, overwhelmingly embracing this market. Well, right now, not a single day goes by when there isn't an ideal wave of warnings and horror stories about what's right around the corner. Think about good news, always downplayed. Great news is always the top. Yeah, but it can never do this again. They'll never do it again. We've got companies that are telling us they're going to have record-breaking sales for the next 3 years, and we're discounting that. Give me a break. I mean, of course, no company can grow at 100% forever, but they can and they will grow. And then when that happens, folks, various metrics are used, right? You use various metrics for growth names, for value names, for cyclical names, and ultimately, that's what we use to justify the share price, higher or lower. But this fascination with picking the top just seems absolutely insane to me when the idea is to make money in the stock market, right now and over the course of a shorter period of time. Go 1, 2, 3 years at a time. Of course, the ride isn't going to be smooth, which is why I urge investors to know what you own. So here's the thing. If you understand the company that you own, what they do, what they're doing, their execution, when someone comes on TV and says, sell it, sell everything, especially this, you might instead buy that weakness based on what you know and not be taken in by someone else's agenda, because everyone's got an agenda. So yeah, I'm duly alarmed at the possibilities that this fourth industrial revolution is going to be underappreciated, that too many investors are going to lose out, because the notion that America will lead this way and that the stock market will reflect that greatness is one of the driving forces behind my optimism, my enthusiasm. So periods like this, folks, check a look at your portfolio, don't do anything rash, and guess what? Buy low so you can eventually sell high. Now, my next guest has made this audience a fortune with her steely timed tech picks over the years, but she's doing something a little bit different, the rotation trade. I'm gonna bring in Danielle Shay, Simpler Trading VP of Options. All right, so we had the meeting, and they said, yeah, Danielle's rotating into retailers. I almost fell out my chair. Talk to us about this move.
Charles, I love the patterns here. And, as you know, I love the AI trade, but we are seeing a rotation out of that. And I'm looking at setups right now in Costco. We have Ross, TJ Maxx, also Walmart. These charts are really strong. They show consistent earnings, great trends, and squeezes ready to break out.
I will tell you this, I'm getting hit on most of my positions from my subscribers, but I did go into Dollar Tree a couple of weeks ago, and we're up big on that already. Let's talk about tech. On your radar, you do have some tech names, though.
Well, I always love SMH, and it is pulling back right now. But what I like to do is I like to buy the breakouts up above the 50 simple on the daily chart. So I'm eyeing these charts right now. I'm looking for the strongest ones, especially NVIDIA, because NVIDIA has earnings at the end of August. And so that one typically rallies going into its earnings report. And I think we're seeing a rotation back into some of these Mag 7 names as well.
Well, what do you make, speaking of earnings, though, that when you see a pattern, Micron earnings that are mind-boggling, one of the greatest earnings reports in history, stock gets hammered. Samsung, the greatest earnings report in history around the world, maybe never a better quarter for any company in the world, stock gets hammered. What do you make of that, and how does does that intimidate you about owning these names that are going to be reporting soon?
It does not intimidate me for owning them. And what it does is it gives me a tradable pattern going into the earnings report where I trade these stocks using long options for that exuberant rally. but then I get out of those options and I continue to hold the stock and I buy more stock after the report, because this is a very common buy the rumor, sell the news event. And because of the excitement in the market right now, this is what's happening. But investors should not be afraid about this pattern because it's completely normal.
Hey, let's talk about cybersecurity. I don't know anyone that doesn't like cybersecurity. Would you own them now?
Yes, they've had a great move recently. They got hit in the software apocalypse, but they're coming back really well. And these charts look like they're ready to break out again to more new highs.
Shorting. Netflix reported after the bell. Stock's under a lot of pressure, but you're considering shorting it. You think it can go lower?
Yes, Charles. This is one of my favorite earnings destruction patterns, where you see a stock that gets hit a few times after the earnings report. It shifts into a bearish trend. And what ends up happening is people bail before the report and then they bail after the report as well. And I have two others that are coming up next week, including IBM and Now. So this is a pretty common pattern that you can look for going into earnings with tickers that have shifted into a bearish downtrend.
So IBM got slammed already, the worst session in the history of IBM, down 25%. Then yesterday it bounced a little bit. A little bit of pressure today, but you still think that the trend is to the downside for IBM?
That's correct. And it's because when you see such extreme moves to the downside, it's really difficult for tickers to recover, especially even if they have a bullish earnings report or bullish anticipation of earnings. What happens is when the stock rallies even slightly, that gives an opportunity for investors to get out. So you just have more downside pressure.
How do you incorporate? I know you do a lot of technical work, but how do you incorporate, let's say better inflation data this week? A July rate hike is off the table. Maybe a September rate hike is off the table. We have someone who wants to be accommodative. How do you incorporate that into your work?
So that's definitely a really important part of my work. However, at the end of the day, it really has to do with price action and technicals. So I would say overall, the economic situation right now is really positive. Macros look good. Earnings season looks good. However, when they're selling,
Right.
it causes technical breakdowns. And
Right.
so with the Nasdaq, we've seen this recent technical breakdown below the June and July lows. And so for that reason, plus the AI selling, semiconductor selling, it does give me a little bit of caution in the market.
And just 30 seconds, if you can, hedging, because some people are holding these names that are under pressure, but ultimately I think they're going to come back.
Definitely. So you can hedge using the QQQs. You can just use puts, or you can use put credit spreads. Typically, I like to target the next low, which would be around 675.
Okay, wow, that's good stuff. Hey, Danielle, buckle up, earnings season. I'm going to be calling on you a whole lot because, some of the big movers are right around the corner. Thanks a lot.
Thank you.
All right, have a fantastic weekend. All right, folks, we started to come back.